I'm talking about the Cascading Pyramid, Regulatory Pyramid, which I think I mentioned last year, probably summertime last year. And I think it's worth talking about because during this whole price dip, I've seen too many heads wobble. Not necessarily in RT, but especially on Twitter, everyone's crapping their pants. And a fair few members in RT, starting to question everything, questioning everything, which you should do anyway. But the reason why I've been happy as Larry and, just chilled out is because, one, this is the third cycle. We've all been through this bollocks. This happens all the time. And also the bigger picture. So my smooth brain bullet points that I mentioned in the cuddle are still there. Went through that last week as well, where we are. We're just before the rate cuts in terms of that sequence. And the other thing is this, which I spoke about last year. So the way I look at it is that on the regulatory landscape, there is this cascading top cover. Now, top cover is a military term we used to use. So, I don't know, if you're in the bar and it's getting a bit leery, you always look to see, is there a higher rank than you? Because whoever's the highest rank, if shit happens, whoever's the highest rank in that area, the shit goes on that person. So it's always like, oh shit, yeah, we got top cover. Right, let's get on it. Or and it's the same in the finance world. Shit rolls downhill, obviously, but it lands on someone first. And so I've created this pyramid, and as I've said here on the note, this is not a hierarchy of AUM, because the SEC doesn't manage money, obviously, and Black Rock would be at the top, I guess, but simply cascading peer pressure amongst each other. For example, sovereign wealth funds may have vast amounts compared to some funds, but they're typically rather reserved in what they allocate into, because let's take the Norwegian sovereign wealth fund. It's huge, but it's basically this country's pension pot, so they're quite not primitive, conservative. So, and the thing is, not all regulators are equal. Unfortunately, you have the US SEC. So really, I should change that to the US SEC. They are the big dogs in terms of the globe, because the dollar is the financial reserve currency, or is the global reserve currency. So they dictate a lot of things. So whatever the SEC says, does, permits, doesn't, or denies, eventually shit goes downhill, and the regulators eventually copy, including the FCA. And then you have massive entities, which is, Black Rock, State Street, Vanguard, Fidelity, all that sort of stuff. And it just goes downhill. So, is a pension fund manager going to allocate into Bitcoin like, a couple of years ago? Definitely not. Now that we have spot ETFs for Bitcoin and Ethereum, all of that's starting to burgeon outwards. And so now a progressive pension fund manager could literally, allocate the teeniest amount, like 0.5% of the pot, into Bitcoin and not have job loss or job risk. That person's not going to risk lose their job by doing that. But a couple of years ago, they probably would have. They would have been like, get out of that Bitcoin position or you lose your job. Yes, sir. And so, but now they can without fear of losing their job. So this is a massive cascading effect. We're seeing huge. I can't remember the companies, but since MicroStrategy, we've had a few other massive corporations do that. I've telegrammed the odd one out here and there. So that's going to continue doing that. Sovereign wealth fund. Go for it, Nimrod. No, sorry, there's a bit of background noise. And then eventually the family offices. So obviously I've explained what these are. And I think the most important part is the IFA route at the bottom. Like, as you know, I'm not the biggest fan of IFAs, but I used to call them bottom feeders, but ultimately that's too derogatory, because it's not really their fault. At the end of the day, they're just people doing a job. they're trying to do the best that they can, and with their hands tied behind their back from the FCA, etc. But all the IFAs are in every country, they hoover up huge amounts of capital, and they force it upwards, not onto the family offices, but the mutual funds, pension funds, not hedge funds, but big fund of funds. Where do they get their capital? They get it from the tens of thousands of IFAs in every country. So now, this hasn't percolated down yet. We don't have, we still don't really have a vehicle that IFAs could, confidently allocate into. But it's just a matter of time. So this is why I'm chilled out. Total crypto market cap can only go up. Okay, and I'm ignoring, shitty volatility that we're experiencing right now. So yeah, that's the cascading effect. So where are we now? SEC is rolled over, forcefully rolled over. They didn't want it to happen like it's happening, but they've just been forced. And so we're just going to watch a plethora of, ETFs roll out. I wouldn't be surprised to see other coins have ETFs now.